Welcome, everyone. My name is Caroline Hoy, and I am the content manager here at Boardable. If you've seen some of our webinars in the past, we love providing you with helpful information for helping your nonprofit do the best work that you can. Today, we're going to be talking about the CARES Act with experts from CLA Connect. I've got Kelsey Vatsas here and Molly Williams, as well as our board governance expert, Kim Donahue, who you might have seen at our webinars before. And Boardable is a central portal for board management. If you would like to check us out at boardable.com, you can sign up for a free trial. Okay, I'm going to look at this poll question here. We were wondering what you were most interested in learning about today, and it looks like a little bit of the majority there is the future of PPP, excuse me, but lots of unanswered questions today, especially as this changes so rapidly. Kelsey, would you like to start us out while Molly gets connected here?
Okay, well, thanks everybody for joining us today. As you might imagine, if you've been watching the news at all this morning, a lot of things are changing in the world of the CARES Act and the funding available. So Molly and I will be doing a lot of probably talking to what's not on the slides today, giving you as real of time updates as we know about what's happening with PPP and EIDL. So we're going to give just a brief overview of the CARES Act in general, really what's most important for nonprofits to know. We'll do a deeper dive in PPP and EIDL. And again, we'll try and focus our comments on what do we know in the last 20 minutes and what would we recommend that you be doing right now in light of what we're learning. We'll highlight some important questions, and unfortunately, a lot of them are still unanswered. We are waiting for some direction from Treasury and the SBA to help us understand really the forgiveness side of the PPP loan. So we'll talk to what are those common questions we're hearing, what do we know or what can we advise at this point, and what should you really stay tuned for that should be coming out, we hope, in the next 4 to 5 days. And then we'll spend a little time talking about, let's zoom out a little bit, thinking about this from a CFO seat. What is the cash flow and scenario planning work that you should be doing kind of alongside in parallel with looking for these funding opportunities? We've got some really specific calls to action, things we would suggest that you do after you leave this conversation today. And then we have quite a bit of time for Q&A. And we'll invite Kim to join us at that point, and she's got some great perspectives on what can and should your board be doing, or if you're a board member here, what should you be doing from that board seat as it relates to navigating these uncertain times. A nice disclaimer, like we have to have, we are not giving legal advice. Molly and I are both accountants by background, and we'll be talking about some accounting advice here, but please do note that we do not have any liability or obligation that goes with that advice in nature. Okay, so a couple of things here, and I realize we didn't maybe give full introduction, so I'll just give you a little bit of, why you might listen to me and Molly here for a few minutes. So I'm a principal at Carson Larson Allen. I'm based out of our Minneapolis office. I've been with the firm for about a decade and have spent my whole career working with nonprofit clients. Started as an auditor, moved over to doing consulting, and then also work as a kind of an outsourced CFO for a lot of our nonprofit clients. And in that role is in the last month or so, I found myself, like many of you probably did, on our firm's COVID response team. And still can't exactly say how I wound up on that team, but have gotten to work with Molly and about 100 of our colleagues across the firm who are spending most of our days right now trying to understand and interpret everything that's coming out and to help our clients go after and access that those funding sources that are available. So we're pretty much knee deep or neck deep, if you will, in this every day. And that's part of why we're here with you today Molly, do you want to just introduce yourself briefly?
Yeah, absolutely. Good afternoon, everyone. Thanks for joining us. I am Molly Williams. I'm in the Indianapolis office for Carson Larson Allen and focus on not-for-profits on the outsourcing side. Not-for-profits are part of my makeup. Love working with them and helping them meet their mission. And clearly with this COVID situation, even more needs. So I'm happy to have jumped in on the COVID task force and help kind of navigate these interesting waters we're in right now.
Great. Thanks, Molly. All right. So what we've got here, so the CARES Act, which probably all of you are familiar with to some extent, was signed into law what now seems like a really long time ago, but it was less than a month ago on that Friday, the 27th, that Congress did pass the CARES Act. And within it came a bunch of different provisions for really targeted for small businesses, and then most of which are open to nonprofits as well. So $2.2 trillion, which is a lot of money and sounds like a lot of money, but as we're learning, is running out quickly. And this was divided into a number of buckets, but the main ones you've probably heard of are the Payroll Protection Loan, or the PPP, which for nonprofits was really only made eligible for C3 charities and C19s, which are veterans organizations, with 500 or fewer employees. So that is the majority of nonprofits across the country fall within that bucket, but we do definitely have some C6 associations or C4 associations who are really excluded from being able to access this funding, which we think is unfortunate, but is how it's written into law today. The second are economic injury disaster loans, or EIDLs, and these, the language says for private nonprofits. Sometimes you wonder who wrote this. Like, that's not really a term we use in the nonprofit world, and so it probably wasn't written by a nonprofit person. But really, it's most nonprofits are eligible for EIDLs, and those are not forgivable, but they are pretty good loans made available through this program. Another one is unemployment costs. So most of our nonprofits, unlike really any other businesses out there, self-fund unemployment. So instead of paying in each month a percentage, that is a cheaper way to do it until we get into a situation like now. And so one of the provisions in the CARES Act is 50% of those unemployment costs can be reimbursed by the federal government. One of the challenges is that there has yet to be any guidance for states who hypothetically will receive that federal money on how they should go about getting the money from the federal government, or how they should go about getting that money to all of you. So lots of open questions there, and that is going to vary by state. Each state will determine how they go about getting that money to you. There's a payroll tax credit, which is really to incentivize people to keep employees on their payroll. You cannot access that if you get a PPP loan, but it's up to 50% up to $10,000 of payroll. So basically $5,000 per FTE that you can access in a payroll tax credit. So when you go to pay your payroll taxes quarterly, you can get that credit of $5,000 per employee. For some small nonprofits, that actually makes more sense for you than PPP funding. So that's a good analysis to be kind of comparing, and we'll talk more about how you calculate the PPP numbers. But good if you only employ 5 to 10 individuals and maybe at a lower payroll cost, you may come out ahead by pursuing payroll tax credits. And then there are stabilization fund loans. This is basically for nonprofits and for-profits that are larger than 500 employees. Originally, the law just kind of said there will be something available. Now that is coming out. That's what's being called the Main Street Lending Program. It's actually run through the Federal Reserve. There's still not a lot of information about how you actually access those funds, other than it will be applications through your banks, not through the SBA. And it does look like that those will only be available if you're between 500 and 10,000 employees. That if you're smaller than that, our understanding today is you will not be eligible to access the Main Street Lending Program. So one of the most common questions is about what's the difference between EIDL and PPP, because those have been the two most available things for our nonprofits. And before I dig into that, so I'm going to give you some of these hot updates that we referenced earlier, which is as of last night at about 10 p.m. Central, the SBA indicated the SBA directly administers EIDL loans, not banks. And the SBA indicated that they were shutting down the application for EIDLs. They have been overrun with applications. And the allocation of funding for EIDLs in the CARES Act was $10 billion, which sounds like a lot, but isn't really when you look at the number of applications that they received. Frankly, the SBA is kind of drowning in trying to process all of these. So some of the, there's a bill right now in Congress, it's included in both bills, is more funding for the SBA so that they can ramp up staff so that they can be responsive in getting these funds out, as well as additional funding. So the EIDL, again, we'll hit on it because we think that there's going to be more funding coming and this will open back up. So we'll give you enough information about that for when that time comes, hopefully. But as of right now, if you go onto SBA's website, there's a disclaimer that says we are no longer accepting EIDL applications. The other hot update is as of about 9 o'clock this morning, Central Time, the PPP has run out of funds. So of the billions of dollars of funding that were made available for PPP, the SBA basically acts as the major bank for that, and then individual lenders have to go to the SBA and get approval and kind of draw down those funds to then give to you, the organization. And as of this morning, the American Bankers Association put out a statement that the banks were no longer able to access the funding from the SBA, that it was all distributed already. So what that means is if you go to the SBA website, there's now a new disclaimer that I just saw pop up that says you can no longer apply for PPP funds either. Again, the PPP has been so popular to the PPP. So Molly's going to dig into you kind of what's the calculation of the PPP as it stood at 8 o'clock this morning. The new bill may change that a bit. So one of the things that was in one of the versions was upping it from 2.5 months of payroll to 3 months of payroll. So you could get a larger loan amount. There also at one point was a version that included dropping that 75% of that had to be used on payroll, relaxing that guideline. We don't think that's going to happen. We think the payroll piece is going to stay in, but that's a little bit TBD. So we'll talk through here about what, if you haven't already gotten a PPP loan, what our suggestions to you are in this kind of waiting period, because there are some things you can be doing. So we still think this is relevant to talk about, but just know that if I think we have a slide that says, if you haven't already, call your bank today. That's going to be a little different conversation this morning than you would have had yesterday. All right, so a few of the things to note here. The big difference is the EIDL loan is a loan directly with the SBA, and the PPP is a loan with your lending institution. It started out that PPPs would be going through existing SBA banks, so banks that already do SBA loans. The SBA quickly realized that there were not going to be enough banks to service all these loans, so they opened it up and basically said any FDIC insured bank or credit union could participate in this program, and just had to get certified by the SBA, which they did quickly. So it is rare to find a bank that is not participating in the PPP program, although some are limiting how much they will participate because, frankly, the PPP is not a great deal for the banks. The interest rate's at 1%. It's a 2-year term. Now, a lot of that is kind of backed by the SBA, who will do the forgiveness, but we are seeing some banks, they're hitting capacity issues, and they're not making a lot of money on these loans. And so we are seeing some banks who are kind of capping how much they will participate. The EIDL is not a forgivable loan, but it is still a pretty good loan. So the interest rate for all of you nonprofits, 2.75%. That's a pretty nice rate. And there's a deferral you can see here up to a 30-year term. One of the interesting things to note about the EIDL is it's the only loan you'll probably ever apply for that you don't actually ask for a certain amount of money. So when you apply for an EIDL, they streamlined the process about 10 days ago, which was basically you go on, there's 5 screens you go through. You enter a little bit of information about your organization, and then you get to a screen that says, the SBA will contact you to talk more and ask for more information. As of now, we've had probably over 1,000 clients apply for EIDLs, and we don't have any who have heard back from the SBA yet. So that tells you what kind of backlog they're trying to work through, and which is why they kind of shut this down. But effectively, what will happen when it gets back up and running is someone from the SBA will call you. They will ask for more information, things like revenue trends over the last 12 months, basically a set of financial statements, a lot of information about your balance sheet, especially your debt. They're basically trying to make sure that you don't take on more debt than is reasonable for you to handle. And then they'll come back and say, here's the amount that you're approved for. And then you can decide if you want to take it or not. Whereas the PPP, which at this point, I'll hand it off to Molly, who can talk a little bit more about the PPP. It is a forgivable loan, which is why it's the one that's been kind of most sought after and most popular here.
Good. Thank you, Kelsey. So as Kelsey just said a few minutes ago, we learned this morning that these funds have been depleted. We do believe that we'll have legislation that gives us additional funding in this area. So we'll walk through kind of where we were, where we are, and where we think we're going with a couple changes that we've heard in the application process. I'll try to incorporate some of the questions that are coming through as we speak. I can't stress enough to reach out to your banker sooner rather than later. We think that if you're in the queue now, if funding is instituted, you'll still be in the queue. So again, we can't stress enough, please reach out to your banker. Again, the funds are available to 501c3s and 501c19s, primarily veterans organizations. There are a couple questions on the C6. They are not eligible. So again, just C3s and C19s with 500 or fewer employees. The funds are requested by monthly headcount, and so you want to make sure that you're thinking about headcount. You can look at it, the headcount a couple different ways. We'll touch on that. And just another reference, religious exceptions. Religious institutions can apply for the SBA loan if they are a C3. And then again, going along with religious institutions, we've heard a number of different things from the bank as far as CLA stance. We can include housing allowances under the wages and salaries. And so you want to just make sure, keep that in mind. And again, wages and salaries are capped at $100,000 per employee. Right now, again, housing allowances are included. Some banks are allowing that 100% or 100K cap, others are not. So again, please reach out to your banker to make sure that you're being compliant with the rules of 100K. The calculation of the PP loan, right now, it's based on, again, the 12 months of payroll based on headcount and 2.5% or 2.5 times the payroll cost. We have heard indications that that will be increased to 3 times your monthly amount. So again, it could be that if you weren't in the initial round and can get into a later round, it could be beneficial. You could actually have a favorable half month in your application. Wages, salaries, commissions are eligible, as well as all of the other paid time leave, health insurance, items that are excluded, short-term disability, long-term disability. So you really want to look at the parameters that can be included in the calculation. Compensation for individuals that are outside of the United States cannot be included. So again, only those that reside in the United States can be included in that calculation. Another caveat that has changed from when the program was initially rolled out to now, independent contractors could have been included. Now they are not included, with the exception of if you have a leased employee through a PEO, you can include those wages in your calculation. So you really want to take a lot of time just calculating this as you're ready to go give your application to the bank, just to make sure that everything you're including in your calculation is appropriate. So that's the compensation side. Then once funding is derived, the eligible costs that can be included: payroll cost, interest on your mortgage, rent payments, utilities. Again, you want to be very cognizant of these eligible costs. For the hard costs that can be included, they had to have existed on February 15th of 2020. And so new expenses that have been incurred after the situation arose cannot be included. And again, payroll cost have to be used for 75% of the loan, at least 75% of the loan. And so really that calculation is essential as you work through the use of these funds. The funds can be used for an 8-week period following. This does say the loan origination date. That's how this process started. The banks are now, and the feds are saying that it's from the first payment from the bank. And so if you're given an award, from the first payment you receive on the award, that's when your clock will start for an 8-week period. So again, really want to just make sure that you are following the rules and regulations here. Couple questions on the side on utilities. So again, operations within your structure. So heat, water, just kind of the main operations of your facility. So once we get through the loan process, employee and salary reductions covered are part of the loan forgiveness. So again, really want to be aware of the loan forgiveness. A couple different caveats have been in place. June 30th was when staffing had to be in place. Now that we are hearing additional funding may come forward, we are assuming that June 30th date will be pushed back. And so again, we believe that everyone that is in the queue right now, if funding is released, they will still be in the queue. But again, we can't stress enough, please reach out to your banker. For many organizations, that is going to change kind of what your immediate crisis is, whether it's staffing right now or if you're funded later. We think probably funding won't be available for about 30 days at least. So again, it gets you in a different point in time with the pandemic and staffing and stay-at-home orders and that type of thing. So you really want to think through really what's best for the organization. It could be, for some organizations, actually getting funding later might be beneficial to how they are being staffed rather than being staffed during the shutdown. So again, there could be some positives that come from being part of a later release if that comes, just being aware of the really strict parameters on timing. So to apply for the grant, you'll want to just gather the information on payroll, grab your 941s and state income and unemployment filings, get copies of your payroll, documentation of health insurance, retirement, etc. For those that are in a PEO, if you can't gather your 941s, please reach out to your PEO. Tell them what you're doing. They have a memo. Most have a memo now that can state that your organization does fall under their PEO structure, and they can document your payroll, and banks are accepting that as appropriate documentation. So that is a quick summary of the PPP, and I can then hand it over to Kelsey.
Well, this is great news for those in the audience who are feeling like they missed the boat, because it sounds like maybe as the need is made more known, the next relief package could be a little bit more helpful than even the first one.
Yeah, Caroline, I think that's a great way to frame it. Now, obviously, no one can promise what is going to happen, but I think from what we're seeing from Mnuchin and from what the president has been releasing, and even we've got folks from the House and the Senate who are all saying, yes, we agree, this needs more funding. It's just the details of that funding. And if you would imagine, any advocacy organization out there right now is trying to put pressure to make sure that the terms of this next round kind of treat the group that they represent fairly. So I see a lot of questions in here about what about C6s? Why did C6s get left out? I can't answer why they got left out the first time. I would agree. I've got a lot of association clients who have been extremely impacted by this because you can't hold your meetings, which is where you make the money to pay for everything else you do. And so I know that ASAE and others have been doing quite a bit of advocacy trying to get the next round of funding to include C6s. I have not yet heard whether or not that will be true. So that is one kind of common question in here. Can't answer why it happened that way the first time, but hopefully that's something that might be remedied. So be sure to kind of stay tuned as this all comes out to see if that's something you might be eligible for. The other thing I'll mention with C6s is a lot of C6s or associations, many of which are C6s, have a related C3 foundation. So a big question was, well, can the foundation apply? Are they eligible? They're a C3. And there hasn't been great guidance on it. And it's one of those round and rounds, we tell you, ask the bank, we, the accountants say, the banks say, ask your accountants. Everybody says, ask the lawyers. No one seems to know because Treasury hasn't actually issued guidance on it. But what we've been advising is it seems reasonable that especially if you have dedicated foundation employees, and you can identify that even though they're employed by the C6, that they are dedicated to the C3, that you could show an allocation of their payroll costs into the C3, and the C3 could apply for PPP loans. I have a few association clients that have gotten approved doing that. I do have one who the bank rejected it and said, no, it's not payroll of the C3, it's not eligible. So banks are interpreting it differently. Have that conversation with your bank, but there might be a way that you could at least get some PPP funding if you do have a C3 foundation.
And there are other, quickly, Kelsey, there are a couple other questions based on payroll of can you still apply if you're volunteer based or you don't have anyone on payroll. The PPP, the main focus is payroll. And so if you are an organization like that is funded by volunteers or non-paid staff, this next option might be a better option for you. And you could quantify the impact that this has had on your organization rather than the payroll impact that it has had.
Yeah, great point, Molly. We're getting those questions a lot. And the other thing I've heard is, well, I'm kind of a startup nonprofit and I haven't, I'm the founder and I haven't paid myself yet, but I was going to start paying myself. Unfortunately, even a board resolution saying starting in March, we're going to pay you $5,000 a month. Unfortunately, that isn't going to cut it. You do have to have payroll records. But if you're a new organization, instead of using 12 months of payroll to identify the average payroll, you can use the January and February payroll. Okay. So, all right. So we did see some questions. What does EIDL stand for? Economic Injury Disaster Loan is what that stands for. Again, you can't go apply right now today, but we do think this will open back up. And this is an option, especially if you don't have payroll and you would not be eligible for PPP. This is a pretty good option. You can see kind of the specs here on the features of this loan. There is collateral if it's more than a $25,000 loan, but they're pretty flexible as to what they'll take in terms of collateral. So they're really trying to make this be a loan that many people can access. I saw a number of people in the chat earlier saying, well, I submitted my EIDL, I haven't heard. That's pretty common. How we interpret what came out from the SBA last night is that if you have already submitted, you are in the queue, and they are doing kind of a first in, first out sort of methodology for how they're addressing those. So we would imagine those who started applying 16, 17 days ago when it first opened are probably starting to hear from the SBA now. If you applied 10 days ago, it might still be a while before you hear. But if you did get in initially, you should still be in that queue. A few other things here. No cost to apply. Again, they streamlined the submission process, so it looks different. It looked different yesterday than it did 5 days ago, than it did 10 days ago, as they tried to make it a simpler process, which is a good thing. There is an opportunity. This was kind of a hot topic among lots of organizations. Originally, it said opportunity for a $10,000 emergency grant. Basically, you go in and apply for an EIDL. You click a button that says, yes, I want the emergency grant. And the statement is you'll get that money within 3 days. Well, if you read the fine print, it's you get that money within 3 days of the application being accepted. And so I don't know that we have any clients yet who have actually gotten the cash hitting their bank account. So there's a delay there. The other thing that they clarified yesterday or the day before was that it was up to $10,000, which they decided based on demand, they were going to kind of prorate it to say $1,000 per employee up to 10 employees. So it was based on your count as of January 31st. Again, right now, if you went in today, you can't apply for this, but hopefully when it opens back up, that feature will still be there. The one thing to note is if you do get a PPP loan and you get the $10,000 emergency grant, you can't really double dip on those. So there is some overlap between the EIDL and the PPP because they are ultimately both SBA lending mechanisms. All right, so what can you do to execute? Ignore this today. You can't do any of this today, but when it opens again, which we expect that it will, this would be how you could go in and start that application process. We would recommend that you monitor that and that you start. Yep, I see some notes here. It's not available today. You're right. They, as of last night, they ran out of money and they shut it down. But stay tuned to that, and I would recommend if that's something you're interested in, as soon as it opens back up, be ready to jump in there and get your application in. All right, Molly, you want to talk about some of these common questions, many of which have been popping up in the chat here as we go.
Yeah, absolutely. So will the PPP forgiven funds be included in your calculation of the single audit requirements? We are still trying to get that answer. Once we get an opportunity, we will spread the word with folks. If you have an independent contractor, this is on the sidebar here, if you have an independent contractor, that can be included in the calculation of the EIDL or in the information that you share with that, but cannot be part of the PPP. It looks like a couple folks here, just have to give a shout out of congratulations. A couple folks have gotten the emergency fund, so great to hear on that. Other questions that we've come across of what's the maturity? It's a 2-year maturity. You do not have to make any payments for 6 months. Interest will accrue during that period, but no payments will be needed for at least 6 months. And that can then even be pushed back even further to 1 year before making the first payment on the portion of the funds that were not forgiven. And how we get to that, again, the forgiven part is if at least 75% of the funds received on the PPP funding went towards payroll, then in theory, everything should be forgiven. And so you can then recognize the full funds as income and then release the debt for that loan. For the portion that isn't forgiven, so say you only spend 70% of your funds on payroll, then that 5% differential would be due back for those funds, would stay on your balance sheet as a debt until that was resolved. And there's a 2-year maturity on the loan, just as a reminder, and they have up to 10 years to pay those funds back. Let's see.
Yeah, Molly, one common question for our nonprofits is, I'm a 6/30 year end. What if I get the PPP funds and I use them and it's going to be forgiven, but the SBA hasn't actually, granted me forgiveness yet? How does that show in my year end financials? And based on everything we know right now, unfortunately, that's going to show as debt on your year-end financials. You're probably going to show a loss if you weren't already on your income statement, because you can't count it as revenue until the forgiveness has been granted. So we're going to have a lot of summer year-end organizations with pretty wonky looking financials come your audit time this year. That's going to be true across the country. You know, I think everyone's just going to deal with it, but do be prepared that that's probably what it's going to look like for a lot of organizations.
An important fact too on the EIDL, if you receive or if you're awarded funding, you don't have to take it. So if you go through the application process, you're trying to get all your options, and you have received a PPP loan, or you have an external funder or state funding that has come about, you can deny the EIDL funds without any type of penalty. So it's sort of, we've been coaching folks that, go ahead and apply, and kind of we can see where the world goes from here, and then make a decision when you get a decision on the award.
Interesting. I see a lot of questions in here about the time periods of the PPP versus the EIDL. Is that, it's such a confusing thing to keep straight for people.
Yeah, this is Kelsey. I'll jump in there. So I would think about it this way. The PPP loan is really intended to be a short-term payroll protection. That's what it stands for, right? Sort of loan. And so it is really focused on an 8-week period that you're supposed to be spending the money that you got, and spending most of it on payroll. Really, the intent of that funding was to keep people off unemployment. That was the whole reason for payroll protection. So bring people off unemployment, get them back working for you, even if that means you don't have that much for them to do, for the next 8 weeks. So the real kind of focus period on the PPP is an 8-week period after you get the loan. Then, like Molly said, it is a 2-year loan term if there's a part of it that's not forgiveness. So forgiven. So PPP is pretty short term. The EIDL, on the other hand, is much more like a normal loan. So the terms can vary, but they can be up to a 30-year loan. So it could look more like a mortgage or something like that for your organization, at a pretty good interest rate, allowing you much more time to pay that loan off. If that's helpful. And then there's different kind of deferral time periods on how long you can defer before making payments between EIDL and PPP. But in a nutshell, those are kind of the big timing differences.
Mm-hmm. There's also a couple questions on the side on our double dipping reference a couple times. So if you have grant funding and you have individuals that are being paid by that grant, and then you apply for a PPP, so the funds are unique, and so you can't apply PPP funds to someone that's already covered by a grant. And so really have to be careful about how you allocate those wages, and how you look at that grant. So many clients are looking at their grant funding, seeing what the duration of the award is, and saying, okay, we're going to pause putting salary on that grant for the next 8 weeks, use the PPP, and extend the life of the grant. And so that's what we mean by no double dipping. So just one person per dollar, not multiples.
Yeah, and I think this is, within the nonprofit world, this is one of the most common questions. And unfortunately, again, there's not a lot of guidance on it. And so that's where there's clarifications that have been sought by the OMB right now, who has oversight for a lot of the government grant work, trying to better understand, especially because for many of you, we've been in this trying to determine grants versus contracts. And so does a government contract count differently towards this than a grant? All of those questions we're getting asked, and there aren't great answers to them, but I think, a couple of things. One is, are you following the spirit and intent of this program, which is to keep people employed who otherwise you probably would have had to lay off? And, do you have existing sources of funding that are not going away, especially if it's government funding that's not going away because of COVID? Then you would think about that you probably couldn't use PPP funds to pay for that cost. The other kind of nuance to this is a lot of you are saying, okay, well, maybe I get government funding, but it only covers really 80% of the related payroll. And I fund the rest of it by fundraising, and my fundraising is already starting to drop, and I think that that's going to continue to go. Can I use PPP to cover the 20% that's not covered by the government grant? My interpretation or our interpretation today would be, yep, that seems reasonable. You could do that. How you are going to document and justify that, that's where there's open questions. But our encouragement right now is think about this logically, think about not using government funding to cover the same cost twice. We do hope to have more guidance on this in the next 4 to 5 days that should help clarify some of that.
What sorts of documentation do you recommend people gather right now as we wait for the next step?
Molly, you want to take that one?
Yeah, absolutely. So definitely payroll information. So again, 941, so quarterly tax returns, documentation of staff, value of compensate wages, again, gross wages per period. Do an analysis of your head count. And so you can include full-time, part-time, seasonal, temporary employees. And so for organizations that have varying missions, maybe you have a summer camp and your head count is higher in the summer. So you really think about the right window of time to analyze your payroll of when it's the highest. So whether it's past 12 months, 2019, or if you're a new startup, January, February, gather that information, gather the payroll, mortgage information, just have everything handy. Again, can't stress enough, call your banker too. So be gathering, but call your banker as well. There are a few nuances between the banks. Some are asking for some slightly different things. And so just making sure that you know what your bank is asking. So you're ready. And that just triggered a thought of a question that came up earlier. You can only receive one PPP loan or one EIDL. You can ask numerous financial institutions. If one says no, you can ask another, or we've had institutions that have stopped their applications. So you can ask a different institution, but you can only be awarded one PPP loan or one EIDL. Another question that came through a few minutes ago, if you receive the EIDL money and you're denied the EIDL, you still are allowed to keep the emergency funding. It's not contingent on whether or not you get the EIDL funding.
Yeah.
Do you have any instincts on if there is another round of funding approved? Could a nonprofit apply for the second if they've already gotten the first?
Yeah, our understanding is, so with the SBA, and this is kind of a clarification, so you can get an EIDL and a PPP, both, you just can't use them for the same costs. So that is one clarification. We do have some clients who are going after both. In terms of the, if you got a PPP in the first round and there's another round of funding, unless they change the rules, as of today, you would not be able to go in and get another round. The additional funding would really be for those who didn't get it the first time. So that is one thing to kind of be aware of.
Interesting. I did see another question too, sort of procedurally. If you've applied but you haven't heard anything, is there a way to check on your status or if you're even in the queue?
On the EIDL side, I'm not certain. I know you get a number, and I saw some people in the chat saying if your number starts with a 3, you're good. And a lot of people said that, so that might be true. I hadn't heard that prior. With EIDL, if you had applied prior to it shutting down, you're in the queue. You should have received, like when you hit submit, you should have received an automated email from the SBA. If you didn't, then maybe your application didn't actually get submitted. On the PPP side, because those are being administered by the banks directly, that's a work with your banker situation. So if you submitted and you didn't hear anything back from your your bank, get on the phone with your bank, make sure that they have you in there. The other kind of tip or trick that a lot of our clients are doing is, even now with PPP being shut off, still talk to your banker, still get your application into your bank if they are still accepting them, because most banks, what we're hearing is they're just kind of lining them up in their queue. They might still even be processing it on the bank side, and the only thing they're not doing is submitting it to the SBA. So you still would want to be kind of moving with your bank if your bank is accepting those applications, just knowing you're not going to hear back for a while, or not as quickly as you have been.
Interesting. Someone has entered in the chat area a phone number to try calling. Thank you, Michael. I don't know anything about that number, but this is worth a try.
Yeah, it's probably worth a shot. I know we had some folks, we had 3 folks last week who we just kind of dedicated to trying to get a hold of the SBA to get answers to our questions. And I know we had people sitting on hold for upwards of 7 hours before they heard anything. So I would say feel free to call, but it might be a long day sitting on hold before you hear back. Caroline, one other question I saw in here, and that we've been hearing from a lot of organizations, is if I got the PPP funding and I got the cash and it hit my bank account, like, what should I do with it to make sure I track appropriately? We are hearing differing feedback from banks. Some banks are recommending that you open a second checking account or savings account and move all the PPP money in there, so that you can kind of track it differently. Other banks are saying, well, hold on, if you open this account, you're only going to have it open for a short time and then you're going to close it. That's actually kind of expensive for the bank to administer. So some banks are saying, no, don't do that. But generally, I would say if you have a robust accounting system, your accounting system should be able to set up a different class or different dimension, depending on your system, to track those funds. So there shouldn't be a need for you to put it in a separate bank account unless your bank really encourages you to do so.
And is there any kind of follow-up proof required, or that only being the case of an audit where you have to go?
Yeah, good question, Caroline. So there will be, when you basically submit for forgiveness to say, hey, I used this funding appropriately, you are going to have to submit documentation that supports or substantiates that. We don't know exactly what that is going to require, but I think it's safe to assume similar documentation to what you submitted to get the loan. So payroll statements, if you have an updated quarterly 941 from then, your general ledger documentation, probably bills that have been marked as indicated as paid with canceled checks, all of those things that you would need to say, yep, I used this funding as I was supposed to. So until there's more guidance, we don't know the exact details, but I would start gathering and kind of setting aside all of that information, because you will need to bring that back to the bank.
And just to add on to that point, it is reported on a cash basis, not accrual. So as you're looking at payroll, you do want to look at when the funds are paid during that 8-week period, not what is earned in that 8-week period. So again, you want to think of the cash basis.
Oh, interesting. Yeah, there's a lot of questions here about the calculation. Some people, as you said, average different employee numbers throughout the year or whatever, but you're saying it's based on that specific time period of February, March, or the 8 weeks. Yeah, they're in that window.
The 8-week clock begins when your funds are received. So you'll apply, you'll get the award, and then when the funds hit your bank, that's when your 8-week clock will start. And so again, for those that have applied and are in, so if they receive funding right away, 8 weeks. If there's another cycle later, that might be beneficial to some types of organizations that have different staffing levels throughout the year. So, summertime staffing or that type of thing, the later you can push that, the better, because your clock will start when the funds are received.
Interesting. I saw someone ask if there is a second round approved, if it would be the same time period or maybe a later one as we move on through this crisis. I guess we don't know yet.
Yeah, we don't really know that yet. Like right now, for the first round, the funds need to be again used by that 8 weeks, staff has to be in place by June 30th. We can just assume that if the funding does come through for another round, that will likely be probably in another month. And so we believe that those timelines will be pushed back for that round.
Interesting. Lots of questions about contractors. You mentioned earlier that that was something you could cover as long as you can document it. Is that right?
A little nuance there. So on the PPP, and there was a lot of confusion about this at first, the initial language in the CARES Act did say independent contractors could be included in payroll, but then it also said independent contractors could go in for their own PPP. So everyone started thinking through the math there and like, well, that kind of ends up being double dipping almost for the independent contractors. And so there was clarification in the interim final rule number 1 from the government, which only the government gets to use that kind of language, interim final, which they have updated quite a few times since then. That was one of the very first clarifications they made, was independent contractors could not be included in the PPP calculation of payroll cost, and they could not be included in the payroll for forgiveness, with the reason that an independent contractor then a week later could go in and apply for their own PPP loan, and that way wouldn't have a chance of getting kind of double paid. What's tough about that for nonprofits in particular is a lot of smaller nonprofits don't fully employ a lot of their employees. They use subcontractors. You all use subcontractors for a lot of things, for grant writing, for accounting, for all sorts of things. And so what that means is that you still need to pay those people, but you can't get PPP loans to pay them. So that can be a challenge for a lot of our nonprofit organizations.
Mm-hmm. So Kim, I wanted to ask you, we have our governance expert here, Kim Donahue, who we've had so much other material to cover this whole time.
Oh, this is good stuff. This has been good. This is great education for me as well.
How do you recommend boards go about the discussion of deciding what to accept or use or pay? Or that's a big question, I guess, but is this a finance committee decision? How should nonprofits deliberate on this?
Well, I think it goes back to, first of all, it involves a good conversation, a good frank conversation between the board chair and the exec. I think they have to talk about things first. That relationship is really crucial. And then the board chair can take this back to the board and they can talk about what may need to happen. I think I was meeting with a group of CEOs this morning, and they are finding that their boards are doing one of two things. Either they are paralyzed and they want to help, but they have no idea what to do, or else they're jumping in and trying to micromanage the current operations of the board. So there has to be a balance there. And the best thing is that initial conversation between board chair and exec. And all of you chief executives out there have to be willing to ask for help. Ask for help. Don't try to go it alone. And likewise, board chairs have to be sensitive to execs and realize that this is not a time to micromanage, but this is a time to find out what your administrative people need and how you can provide that help to them.
Excellent. Yes, I know there's a lot of moving parts here, which makes it
yes.
difficult decision. Let's see, we were talking about contractors. We covered that.
One question, Caroline, I'd jump in to kind of add up of what Kim said, that many of our nonprofits are running into is if you're running around trying to get your PPP loan together, some banks are requiring that nonprofits include a board resolution resolving that they can apply for these funds, since there's not an owner of a nonprofit to make those certifications. And so one thing you may want to do in advance if you think you're going to go in for PPP is have your board make a resolution, have them all vote electronically using Boardable or whatever else you use on a resolution for you to be eligible to apply for these funds. That way, if you do apply or when you get ready, you have that ready to go. We've had a lot of clients who are like running around trying to get that resolution because they suddenly needed it for that particular bank.
That's a great suggestion, Kelsey, especially if we're anticipating that funds are going to be available again. And you and Molly have already said that nonprofits out there who haven't applied yet should be ready to go. And having that board resolution is an excellent idea. I think I saw a question earlier that some organizations have been asked for Social Security, personal Social Security numbers for the CEO and for the board chair. And that may partially be because they don't have a board resolution.
I saw that too. That's a scary thing for an individual to put on the line there. So we want to get the board resolution. We want to get all these payroll records and everything, talk to our bankers, have all those questions answered about how we're defining utilities or whatever else, and ready to go the second that the next round is announced.
Yep.
Absolutely.
Yes, we don't know when that will be, but hopefully soon. Yeah, go ahead. Sorry, was that Kelsey chiming in?
Oh yeah, I was just going to jump. We had kind of, we've skipped through a few of our slides, which is just fine. I was going to jump. We had kind of some action steps that we would suggest your call to action. This might be a good way to summarize at the end here. Make sure you have your team in place and ready to go to support you in this, and think about who those people are. These might be your board members in nonprofits cases. Get your applications ready. Do an evaluation of your cash flow. So look at what you think your cash position is going to be the next 3 to 6 months. I would suggest doing a worst case, best case, most likely case scenario, and happy to share some tools with you and some other articles about doing those. There are some short-term things you can do to save cash. Reach out to your lenders if you have loans right now and ask about deferring payments. Many of them are doing that. Work on some of those projects you haven't done, you haven't gotten to. If you do bring staff back on and you don't have a lot for them to do, and then get ready for the future reopening and what the world might look like post COVID, which hopefully will be sooner rather than later. So just some things to think about as you depart here.
Yeah. Are there any other programs we should be thinking about outside of the CARES Act or the future PPP, EIDL possibilities?
Great question. So these are the big ones. These are the big federal ones, but there are a lot of local programs happening as well. Many of them are more small business focused on the loan side, but a lot of our foundation communities are coming together and making grants available. So the Council on Foundations actually nationally put together a pledge trying to get foundations to commit to restricting funds that you might have that have restrictions right now, so you can use that money as you need. So that would be one thing. Check with your funders, see if they'll release restrictions. Also ask them about if they're making any additional resources available. And then look at your local. A lot of chambers of commerce are doing a good job kind of compiling local programs that are available for both nonprofits and small businesses for other funding options.
Great. All right. Well, we're right at an hour. So I am going to go ahead and thank everyone for coming. So grateful to have these experts here today. Thank you to Kelsey and Molly and Kim for your insight into how nonprofits can enact some of this great advice. Thank you, everyone. And we will be back with you with more helpful information as soon as we have it.